All right, we're diving into some really interesting stuff today. The U.S. Strategic Bitcoin Reserve. It's kind of like Fort Knox, but for Bitcoin. President Trump just made this huge move with an executive order, and we're going to break it down. We've got articles, analyses, even some pretty heated debates to sort through.
What I find really fascinating is how the U.S. is positioning itself in the whole digital asset landscape. We're not just talking Bitcoin here. There's a whole separate stockpile for other digital assets they've seized.
So it's a two-pronged approach. A Bitcoin bunker AD, this digital asset stockpile. Let's start with the Bitcoin side. We're looking at 198,109 Bitcoin, worth something like $17 billion. That's a serious commitment.
It is. And that digital Fort Knox idea you mentioned, that really captures what they're going for here. They're not planning on day trading this Bitcoin. It's about holding it long term, like a store of value, just like Fort Knox and gold.
Makes sense. But it is a pretty wild turn of events, thinking about what Trump used to say about Bitcoin. What's behind this sudden shift?
Well, the political and economic scene has changed a lot. When the Biden administration started regulating crypto more strictly, the industry really threw its weight behind Trump's reelection, even donating a lot of money.
And now we've got this push to make the U.S. the crypto capital of the planet. Interesting how things work out, right? But what's the main reason for stockpiling Bitcoin?
Proponents argue it's a great hedge against inflation, especially with worries about the dollar's future. Unlike typical assets, Bitcoin has a fixed supply, kind of like gold.
So the U.S. is adding digital gold to its reserves, getting ready for economic problems or even changes in global financial power. Pretty fascinating, especially when you think about how this might affect the dollar globally.
That's a big point, and it could even trigger other countries to start their own Bitcoin reserves. Imagine a world where countries are judged by how much Bitcoin they have.
That's wild. But let's step back for a second and talk about how the U.S. might get more Bitcoin through what some are calling budget-neutral strategies. What does that even mean?
There's a lot of speculation, but one idea is shifting existing assets, maybe even some of their gold, into Bitcoin, a way to increase their Bitcoin holdings without using taxpayer money directly.
So basically, financial maneuvering to boost their Bitcoin reserves. Could they also do things like auction off federal properties to buy Bitcoin?
People are discussing that too. It makes you wonder how far they'll go to get more Bitcoin. And of course, there's the whole question of whether individual states might start doing the same thing.
Think about a state like Texas, which is already pretty crypto-friendly, starting its own Bitcoin reserve. It's not impossible, right?
It's definitely in line with what we saw with legalizing cannabis. What the federal government does often trickles down to the states.
Okay, so we've talked about the Bitcoin bunker. Now let's switch gears to this digital asset stockpile. What's the deal with that?
It's a little more complicated than the Bitcoin reserve. While that one's all about Bitcoin, the digital asset stockpile is for all sorts of cryptocurrencies the government has taken through legal actions.
We know they've got at least 56 Ether tokens in there. There were rumors about XRP, Solana, and Cardano being included too, but nothing official yet.
And here's a key difference. Unlike the Bitcoin reserve, which is just for holding, the government can actually sell things from the digital asset stockpile. This gives them a whole new set of options.
This is where it gets really interesting for me. Why have two separate stockpiles? Is it just about diversifying, spreading their bets across the whole crypto world?
Diversification is part of it, but it's more than that. Bitcoin and other cryptos each do different things and have different potential uses. It's like a toolbox with different tools for different jobs.
So they might be looking at these other digital assets for strategic reasons, not just as a store of value. Could some of these altcoins be good for building blockchain infrastructure or making cross-border payments easier?
Exactly. Some altcoins are made for things like decentralized finance, DeFi, managing supply chains, even building better voting systems. There are so many possibilities.
So it's all about strategically placing the U.S. in this new digital world. Now, how the market reacted to this whole Bitcoin reserve thing was unexpected. It actually dipped after the news. Shouldn't this have been good for Bitcoin?
It seems strange, but the market was expecting the U.S. government to start buying a ton of Bitcoin with taxpayer money. When that didn't happen, there was disappointment, and some people started selling.
It's that buy the rumor, sell the news thing, expectations versus reality playing out live.
Exactly. It shows how much market sentiment and speculation matter in the crypto world.
With all this going on, what should the average person be thinking? Should they be rushing to buy Bitcoin?
That's a personal choice. Depends on your own finances and how much risk you're comfortable with. What's clear is that this move by the government makes Bitcoin a legit strategic asset, like gold or other traditional reserve assets.
It definitely legitimizes it, but it also raises questions about what this means globally. What are other countries saying about this?
That's where we'll pick things up in part 2 of our deep dive. This U.S. strategic Bitcoin reserve could start a global digital arms race, with other countries scrambling to get their own reserves. The impact could be huge.
Sounds like we've got a lot more to uncover. We'll be back soon with part 2, so stay tuned.
Welcome back to our deep dive into the U.S. strategic Bitcoin reserve and the digital asset stockpile. As we talked about in part 1, the U.S. government getting into crypto is causing quite a stir, and it brings up a big question. Couldn't they take this even further and start putting taxpayer money into altcoins?
That's a really interesting question. It seems like a bold move, but I mean, they've already got the Bitcoin reserve, so is it really that far-fetched?
It's definitely a hot topic with strong arguments on both sides. Let's look at the potential benefits first. Why might the U.S. government want to get into altcoins?
Well, one argument is that it could help them stay ahead of the game in the crypto space, which is changing so quickly. We know that different altcoins can do unique things and have uses beyond just being a store of value.
That's key. Investing in altcoins wouldn't just be about making money. It could be a strategic move to make sure the U.S. leads the way in the new digital economy. For example, some altcoins are all about building the foundation for decentralized finance, DeFi, or making supply chains better.
Right. It's about seeing the bigger potential of these technologies and making sure the U.S. is a major player.
Exactly. Another argument for investing in altcoins is diversification. Like we discussed, Bitcoin can be pretty volatile. Spreading investments across different cryptocurrencies could help reduce some of that risk.
So it's like that saying, don't put all your eggs in one basket, but for the crypto world.
Precisely. In a world as unpredictable as crypto, diversification could be a smart move.
Okay, so we've looked at the good side. Now let's flip it and consider the arguments against the government investing in altcoins.
One big concern is the risk that comes with cryptocurrencies. Altcoins, in many cases, are even more volatile than Bitcoin. And a lot of them are still very new, which makes them even riskier investments.
Critics are saying it's irresponsible to gamble taxpayer money on such risky assets, especially because they could lose a lot of money, and that's a fair point.
It is. Then there's the issue of due diligence. How would the government decide which altcoins are worth investing in? There are thousands of them, and they're not all equal.
Right. You've got scams, projects that don't really do anything useful, and it would be a huge job for the government to check them all out.
Exactly. It raises concerns about bias or even corruption affecting their choices, which would mean benefiting a few people at the expense of taxpayers.
Especially with the lack of transparency we've already seen with the digital asset stockpile, it's a valid concern. We need clear rules and ethical safeguards to make sure any government investment in altcoins is done responsibly and openly.
Transparency and accountability are super important when you're dealing with public money, especially in such a new and complicated area like crypto.
So we've seen both sides of the argument. Now let's talk about some specific cryptocurrencies that people have mentioned as possible additions to the digital asset stockpile. We've talked about Ether, but what about XRP, Solana, and Cardano? What makes them different?
Each of these altcoins has its own characteristics and potential uses that make them interesting from a strategic point of view. Let's start with XOP. It's the cryptocurrency for the XRP ledger, which is designed for fast and efficient cross-border payments.
And we know that Ripple, the company behind XRP, has been working with banks and financial institutions all over the world to use their technology.
Right. Strategically, XRP could be valuable to the U.S. because it could help strengthen their position in the global payment system.
Got it. What about Solana? What's special about it?
Solana is known for its speed and low transaction fees. People often talk about it as a potential rival to Ethereum, which is currently the top platform for DeFi and other blockchain applications.
So Solana is like the up-and-comer trying to take on the big guy in the world of smart contracts and decentralized applications.
You could say that. Its speed and scalability make it appealing to developers who are building the next generation of blockchain services.
And last but not least, we have Cardano. What makes it unique?
Cardano focuses on security and relies a lot on peer-reviewed research. It's often called a third-generation blockchain because it builds upon what Bitcoin and Ethereum have done.
So Cardano is like the careful scholar who's diligently working to advance blockchain technology.
That's one way to put it. It's known for its rigorous development process and its commitment to sustainability and social impact.
Interesting. So XRP, Solana, and Cardano all bring different strengths to the table, and they all have the potential to shape the future of the digital economy.
Definitely. And that's why the U.S. government might be thinking about investing in them.
Mm.
But we have to remember that the crypto world is always changing. New projects are popping up all the time, and it's almost impossible to predict which ones will be successful in the long run.
It's a high-stakes game with a lot of unknowns. But one thing's for sure. The U.S. government creating the strategic Bitcoin reserve and the digital asset stockpile shows that they're serious about cryptocurrency. This is probably going to have a ripple effect globally, encouraging other countries and institutions to do the same.
I totally agree. This is a turning point, just the start of something much bigger that will play out over the next few years. Now, before we finish this part of our deep dive, let's go back to the U.S. Strategic Bitcoin Reserve itself. There's something we haven't fully talked about yet, but it's worth mentioning. It's about how this reserve might affect the price of Bitcoin.
I'm curious, what are your thoughts on that? Do you think having the U.S. Strategic Bitcoin Reserve will really change Bitcoin's price?
It's tough to say for sure, but it's definitely possible. Remember, the U.S. government now owns more Bitcoin than anyone else in the world. What they do could have a big impact on the market.
So if the U.S. bought more Bitcoin for the reserve, could that push the price up?
Exactly.
Yeah.
And the opposite is also true. If they decided to sell some of their Bitcoin, it could make the price drop.
So the reserve adds another layer of complexity to Bitcoin trading, which is already volatile.
Absolutely. Traders and investors are going to be watching the U.S. government closely. Anything they say or do about the reserve could really affect the market.
It was like the U.S. government has become a whale, a big player in the Bitcoin market. Their actions carry a lot of weight.
That's a good way to put it. And it shows how important transparency and clear communication from the government is. If they're not clear about what they're doing, it could make the market unstable.
It's a tough balancing act for the U.S. government. They have to manage this reserve in a way that works for them, but they also have to consider how it affects the global crypto market.
Well put. It's a complex issue with a lot of moving parts. It'll be interesting to see how it all plays out in the years to come.
I agree. Now, before we move on to part 3, I want to bring up an argument we've touched on but haven't fully discussed. Some people think that the U.S. Strategic Bitcoin Reserve might actually make the U.S. dollar stronger instead of weaker.
That's an interesting counterpoint to the idea that Bitcoin could threaten the dollar's dominance. Tell me more about what you found in the sources about this argument.
The argument is that by embracing Bitcoin and becoming a leader in the digital asset space, the U.S. shows that it's forward-thinking and adaptable. This could actually boost confidence in the U.S. dollar, showing that they're willing to embrace new technologies and stay ahead.
It's a subtle argument, but it makes sense. Think about it.
Hmm.
If the U.S. tried to fight or suppress Bitcoin, it could backfire and make them look like they're stuck in the past and resisting innovation.
That's true. That kind of stance could hurt the dollar's reputation as a global reserve currency.
Exactly. By embracing Bitcoin, the U.S. sends a message of confidence. It shows that they're not afraid of competition and are ready to adapt to the changing global economy.
It's like a if you can't beat them, join them strategy for the financial world.
You could say that. And it's a strategy that could pay off in the long run, making the dollar more credible and keeping its position as the world's leading reserve currency.
Okay, that's a compelling perspective. It suggests that Bitcoin and the dollar might not be enemies. They could actually help each other out.
That's definitely a possibility worth thinking about. It reminds us that the future of finance is probably going to be more complex and nuanced than just one winner.
For sure. And it emphasizes how important it is to have informed and thoughtful discussions about these issues, moving beyond simple narratives or fear-mongering.
Well said. Now, let's turn our attention to another intriguing aspect of this story that's generated a lot of debate.
I'm all ears. What else have you found that you think we should discuss?
Well, it's about the possibility of the U.S. expanding the strategic Bitcoin reserve beyond just holding assets they've seized. There's been talk about the government buying Bitcoin directly on the market, using taxpayer money to make the reserve bigger.
That would be a big move. It would definitely show a strong commitment from the U.S. government to Bitcoin.
It would. But it's also controversial. Let's explore the reasons for and against this strategy.
Sounds good. First, why might the U.S. government want to actively buy Bitcoin for their reserve?
One reason is that it could help stabilize the price of Bitcoin. As we know, Bitcoin is still relatively young and its price can change a lot. If the U.S. government bought a lot of Bitcoin, it could help smooth out some of those price swings.
So the government could act like a stabilizing force in the market. What are the potential downsides to that?
That's one way to think about it.
Yeah.
But critics say that government intervention in the Bitcoin market goes against the idea that cryptocurrencies are decentralized. They think it could create an unfair advantage and potentially mess up the market.
It's true that the government using its resources to influence the price of Bitcoin raises concerns about market manipulation.
Exactly. It's a complex issue with good arguments on both sides. Ultimately, whether or not the U.S. government decides to buy Bitcoin directly for the Strategic Bitcoin Reserve is a political decision.
Okay, so it boils down to balancing the potential benefits and risks, and in the end, it's a political choice. What other arguments are there in favor of this strategy?
Another argument is that it could help the U.S. get a bigger share of the limited Bitcoin supply. Remember, there will only ever be 21 million Bitcoin. And as more countries and institutions start using Bitcoin, the price is likely to keep going up.
So it's a race to get a piece of this valuable digital asset before it becomes even more expensive.
You could put it that way. By buying Bitcoin now, the U.S. could potentially secure a larger portion of this finite resource.
I see the logic there. Now let's look at the arguments against the U.S. government buying Bitcoin directly.
The main concern, as we mentioned, is the risk involved. Critics argue that using taxpayer money to speculate on the price of Bitcoin, which can be so unpredictable, is irresponsible.
They believe that the government should be responsible with its spending and protect taxpayer money, and that investing in Bitcoin is just too risky.
That's their point of view. They point to the possibility of losing a lot of money and the uncertainty about what Bitcoin will be worth in the future.
So there are valid concerns on both sides. It's a complex issue without simple solutions.
Absolutely. Whether or not the U.S. government decides to buy Bitcoin directly for the Strategic Bitcoin Reserve will depend on the current administration's priorities and the overall economic and geopolitical situation.
It's a decision that will have major consequences, not just for the U.S., but for the global crypto market as a whole.
Well said. Now, before we wrap up part 2 of our deep dive, let's revisit the idea that the U.S. Strategic Bitcoin Reserve could start a global digital arms race.
We mentioned this earlier, but I'd love to hear more of your thoughts on this possibility.
It's a fascinating concept to think about. Imagine a world where countries are competing not just with armies, but also with digital assets.
It's a thought-provoking idea, and not totally crazy, considering how important cryptocurrencies and blockchain technology are becoming.
Exactly. If other countries see the U.S. building a huge Bitcoin reserve, they might feel like they have to do the same, worried about national security or staying competitive economically.
So we could see a global rush to buy Bitcoin, kind of like what we've seen with oil or gold in the past.
That's one possible outcome. And it could lead to geopolitical tensions and power struggles playing out in the digital world.
That's a bit unsettling. It suggests that the crypto world could get just as messy and complicated as the traditional financial system.
It could. But that's not the only possibility. Maybe countries could work together to create global standards and regulations for cryptocurrencies.
That's a more optimistic view. But is it realistic? With how global politics are right now, it's hard to imagine countries putting aside their differences to cooperate on something as complex and potentially disruptive as cryptocurrency.
I agree, it's not easy. But I think it's worth trying. If we can use the power of cryptocurrencies and blockchain technology in a way that benefits everyone, it could lead to a more fair and prosperous world.
That's an inspiring vision. It reminds us that the future isn't set in stone. We can shape it through our choices and actions.
Well said. In part 3 of our deep dive, we'll explore some of the broader implications of this new era of digital assets. We'll look at the potential impact of cryptocurrencies on everything from global finance to personal privacy, and we'll delve into the ethical challenges and opportunities that lie ahead.
I'm looking forward to continuing this conversation in part 3. This topic is so multifaceted, and I'm eager to explore it further.
Me too. This story is still unfolding, and it's up to all of us to engage with it in a thoughtful and informed way.
Absolutely. We'll be back soon with part 3 of our deep dive into the U.S. Strategic Bitcoin Reserve and the digital asset stockpile. Stay tuned. Welcome back to the final part of our deep dive into the U.S. Strategic Bitcoin Reserve and the digital assets stockpile. We've covered a lot of ground in the last 2 parts: the strategic side, the economic impact, even the geopolitical angles of this big move by the U.S. government.
Yeah, and in this last part, I think we should zoom out a bit. Let's think about the bigger picture, the societal and ethical aspects of this whole crypto revolution that's happening right now.
You're right. It's not just about markets and governments anymore. Crypto and blockchain could change how we interact with each other and the world around us in ways we're only starting to grasp.
Exactly. So let's start with this idea of financial inclusion. People often say it's one of the strongest arguments for crypto.
I've heard about that. The idea that crypto can give power to people who are left out of the traditional financial systems, people without banks or credit cards.
Right. Think about people in developing countries where traditional banking is limited. With crypto, you just need a smartphone and the internet. No bank account, no credit history needed.
It's a powerful idea, giving people control over their own money and breaking down those barriers that have kept them out of the global economy.
It could really change things for billions of people.
But I also wonder about the potential downsides. Could this new financial freedom be used for bad things too? Would it make it harder for governments to fight money laundering or terrorism financing?
That's a valid concern. It's something regulators are trying to figure out.
Yeah.
Cryptocurrencies can provide some anonymity, which can be good and bad.
Sounds like a tough balancing act. Encouraging innovation while also preventing abuse.
Exactly. It's an ongoing challenge that needs careful thought and collaboration between governments, industry leaders, and the crypto community.
Let's move on to another big theme that came up in our research: privacy. Crypto raises all sorts of questions about protecting our personal information in a digital world that's becoming more and more transparent.
Privacy is essential. In traditional financial systems, our data is often held by banks and other institutions. But with crypto, transactions are recorded on a public blockchain, which anyone can see.
So crypto can empower individuals, but it also makes it harder to keep financial information private.
That's the trade-off. Luckily, there are ways to improve privacy in the crypto world, like using privacy coins or mixing services.
So it's a challenge that keeps evolving, requiring constant innovation and carefulness from developers and users.
Absolutely. Now, we need to talk about the environmental impact of cryptocurrencies. It's something people talk about a lot, especially when it comes to Bitcoin's energy use.
Right. Mining Bitcoin and other cryptos can use a lot of energy.
Especially those using a proof-of-work system like Bitcoin. It takes a huge amount of computing power to secure the network, which can lead to a lot of carbon emissions, especially if they're using fossil fuels.
So we can't ignore the environmental cost of crypto. It shows we need more sustainable and energy-efficient solutions.
Definitely. The good news is that there's a growing movement in the crypto community to be more sustainable. Some cryptos use different systems like proof of stake, which uses much less energy.
Could you quickly explain the difference between proof of work and proof of stake for those who might not know?
Sure. In proof of work, like Bitcoin, miners compete to solve tough math problems to add new blocks to the blockchain. This takes a lot of energy. Proof of stake, like Cardano, chooses validators based on how many coins they have. This means you don't need all that energy-intensive mining.
That's a really clear explanation. Thanks. So people are working to address the environmental concerns around crypto.
They are. And there are also projects using renewable energy for mining, which could significantly reduce crypto's carbon footprint.
It's good to see that kind of progress.
As we wrap up our deep dive, I'm curious about your thoughts on the bigger meaning of the U.S. Strategic Bitcoin Reserve and this whole crypto revolution. What do you think it means for the future?
It feels like we're watching a major shift in how we think about money, value, and power. Crypto and blockchain could really disrupt traditional systems and give individuals more power in ways we're just starting to understand.
I agree. We're at a turning point. The future is uncertain, but I believe cryptocurrencies are here to stay. They will continue to change and shape the world. We need to engage with this technology thoughtfully and responsibly, using its potential for good and minimizing the risks.
Well said. It's an exciting time to be alive, but it's also a little scary. There's a lot we don't know, and the stakes are high.
That's what it's like with any big innovation. We have to embrace the unknown while also understanding that we have a responsibility to shape the future in a way that benefits all of humanity.
I couldn't agree more. Now, to our listeners, what are your main takeaways from all of this? What are your hopes and fears about the future of crypto? This is going to affect all of us, so it's important to stay informed and involved.
Remember, this is just the beginning. As we move into this uncharted territory, critical thinking and a willingness to learn and adapt will be our most valuable tools.
We'll continue to follow this developing story closely here at The Deep Dive. Subscribe for more in-depth discussions and analysis. Until next time, keep exploring and stay curious.